You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where we break it all down there on the futures options side of the fence. Maybe some ags, maybe some metals, maybe some energy, some equities. You never know. Rates, whatever is going to make it on. Lean hogs. Got to tune in every week to find out. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. Remind you, if you want to get all that exclusive content we do there, as well as get access to our live streams, as well as all the giveaways, all the other fun stuff that we do, it's only one place to go, theoptionsinsider.com/pro. That's the place to go to learn more. And of course, if you listen on the on-demand side, like a lot of you do, if you enjoy what you hear, all we ask that you rate and review. It really does help all the legion of new folks who, let's face it, given the headlines we've seen over the past couple of months, commodities much more in the focus than they have been for many years. So a lot of folks are discovering these markets anew, afresh. They need a place to go to learn more about them. TheOptionsInsider.com is the place we want them to head to. So, of course, keep rating and reviewing. Really does help all those new folks discover the content. Let's see who's joining us on the program today. Holding down the CME Group and FTSE Russell hot seat is our old friend now, Miss CARLEY Garner, the senior analyst and broker over there at DECARLEY Trading. Also the author of a few books like Trading Commodity Options with Creativity and Higher Probability Commodity Trading. CARLEY, welcome back to the hot seat. It has been too long.
Hi, Mark. Thanks.
A lot going on out there this week. You picked a good one.
You're telling me. A little too much, actually.
Oh, well, we shall see as we keep on rolling. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME this week. And CARLEY, as our guest, I will give you pride of place. Where should we begin our journey this week?
You know what? It's been a depressing couple of weeks. Let's go to the dark side.
Oh, right to the dark side. I knew it. I knew you were a woman after my own heart. I like the dark side myself. And yeah, you can find this report for yourselves, listeners, if you follow us on Twitter at Options, or if you follow CME. We both tweeted out right before showtime. It's pretty much the only way you can get access to this report outside of if you are a premium user, which you definitely should consider if you like trading these markets. Bantix.com, BANTIX.com is the place to go to kick off, get your free trial of the premium version of Quick Strike. If you like what we talk about here, this is just scratching the surface of the amount of data you can get access to over there. If you're interested in these markets, you really should be checking out these reports over here. And of course, get access to your own movers and shakers whenever you want over there, listeners. But to the dark side we go, and a little bit of energy retracement here on the dark side this week. Number 5, we've got WTI off a little over 2.5%, about 2.6%, followed by staying in the energy with Brent off 2.92%. Then to the ags, we go to oats off 4.52%. Oats, as you know, listeners, not really a big options player out there. Number 2, it's our old friend Nat Gas. It's been rocking and rolling a lot of late, and this week it is back to the dark side, off 6.6%. It was number 2 in the other direction last week, up 13.25%. I've said it before, I'll say it again. If you come in on this show and if you guess either lumber or nat gas or Bitcoin, you have a pretty good chance of being right in one direction or the other any given week out here. It looks like that is the case again this week. Nat gas number 2. Number 1 with a pretty sizable bullet, Eurodollars. We're showing data off 43.25%. Again, take that with a little bit of a grain of salt, listeners, because as we said, we had Nick on the show before, and he's talked about how challenging it is sometimes to come up with one number that encapsulates the entirety of the movement for all the different moving parts out there in Eurodollars. So that's a pretty aggressive number. Last week, it was number 2 in the same direction, off a comparatively modest 3.69%. So Eurodollars leading the dance, perhaps not quite as aggressively as we're seeing here, but still an interesting week out there. Then to the light side we go. Number 5, to the ags, it's soybeans, up 3.86%. Number 4, a metal that has been rocking and rolling a lot of late. It's number 4 to the light side this week, palladium, up 4.19%. It was number 3 in the same direction last week, up 12.5%. Again, before you get all hot and bothered, 21 contracts on the tape last week for palladium, so probably not going to hit that one. Number 3, another one of our frequent offenders, it's Bitcoin, coming in this week, up 6.65%. It was our number 1 mover in the other direction last week, off nearly 6.75% out there. And then number 2, we were just joking about this on our last show. I revealed this mover and shaker on our option block show because that became our inaugural bacon cast. We got dragged into a great discussion about bacon on that show, which has made me want bacon ever since. Speaking of bacon, number 2, lean hogs, listeners, up 11.29%. Can we hang our hats out there in lean hogs? You know, it is becoming more of an options player than it used to be when we first launched this show. So who knows? Perhaps we can get a little bacon love here on the show as well. And number 1 to the light side this week, another one of our 3 frequent offenders, the trifecta that seems to dominate TWIFO every week. It's lumber, back to the upside, up 16.36%. So a whole heck of a lot of moving and shaking. We have stuff moving in just about every product category, CARLEY. So I'll let you choose. Where should we hang our hats first?
Let's talk about the energies. Plenty to talk about.
Energy it is. So listeners, you know where to go. Go to that drop down. Go out to, by the way, cmegroup.com/TWIFO is the place to go to access those great fee reports. Then go into that asset class drop down and pull it on down to energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, and into energy we go. And obviously we have 2 frequent offenders in here, but nat gas is on our dark side movers and shakers this week, so we shall begin there. So go into energy, then go over to that product family, slink down 3 to natural gas, and then choose that top natural gas product. Listeners, you'll see coming into showtime, we have retreated from that 7 handle, at least in that front future. It's about 695 or so. You get a little bit farther out, though. We're still back over the 7 handle out there. So nat gas taking a bit of a break. That front future off nearly 5% just this week, 4.75%. So a lot of action. I know, CARLEY, the last time you were on, you were talking about just kind of the insane upside. I believe you had some risk reversals on in nat gas out there. So a little bit of a retracement this week, but we still are flirting with this crazy 7 handle out there. What's been lighting up your tape in nat gas this week?
Well, natural gas feels obviously feels really, really expensive to me here. If I look at monthly charts and weekly charts, I do see maybe a little upside beyond this week's highs, but I think it's limited. And I think an argument could be made that the crazy rally we saw a few days ago was maybe some sort of a blow up top. Now it's going to be really wild and all over the place, even if assuming I'm right, and I could be wrong, but assuming I'm right, it's going to be a wild one. So I'm not sure how you play it, but I'd say any way you do it, be careful. One idea would be to just sell strangles. The premium is really fat. You can sell, even if you're looking to sell like $12 calls and $5 puts in August, you could probably collect a good amount of premium, and that gives you plenty of room, because picking a direction in this stuff is tough. It'll rip your head off if you're on the wrong side or you're early. So be careful.
Yeah, it's been fascinating to watch what's been lighting it up. Not too long ago out here, we were talking about 7 calls being active all the way out till the end of the year. That seemed pretty optimistic when we were hovering well south of that. Now, of course, we are at or above the 7 handle. At least we were last week. And we were talking about 10 calls being pretty active throughout the entirety of the year. That has retreated a little bit out there. By the way, how much paper is on the tape this week in nat gas? This was a pretty active week, 622,000 contracts. So nat gas not sleeping at all this week. It's also doing its best equity impersonation, because 24% of that paper is going up in the May contract that has a whopping 5 days to go. So we probably won't be hanging our hat out there. But if we just go one contract beyond that list, as we go out to June, that has about 34 days to go. That did 14, almost 15% of the paper. So I think we're going to hang our hat out there. Give us a little bit more meat on the bone to actually analyze out there. If you're wondering what is the vol out here in nat gas, as CARLEY mentioned, it's kind of frothy. It's as you would expect. It's ticking up again this week. Let's see, that May contract that goes away in 5 days, that's about a 67. We go out to June, that's still higher. That's looking at almost an 80, 79.5, up 5.75 points from where it was this time last week. In terms of skew, last week we had the puts 5.4% cheap. This week, getting a little bit cheaper, 7.3% cheap. Calls, they were pretty bid up last week, 10.5%, coming in a little bit this week, down to 8.3% premium over that 79.5 at the money vol level. And in terms of the most active contract, I was talking before about the 10 calls dominating it last week. 10 calls are still lighting it up a little bit this week, but there's a little bit of, it's like diversity of action out here this week, which is kind of interesting. It's the 8 calls this time in that May contract that has 5 days to go. They were leading the dance this week with just a tick under 19,000 contracts. The big day was Monday, 9,300, followed by 4,400 on Tuesday, 3,400 today, 1,800 yesterday. Back and forth opening and closing all week long. So a lot of back and forth paper, not surprising on this 8 strike, as we've kind of been fluctuating around in nat gas. And then right behind that, though, CARLEY was just talking about the puts out here. The puts were pretty active in October as well. We have these 6 puts. Someone put on a ton of them on Monday, 13,200 trading on Monday, all of that opening, a total of only 15,500 on the week. So 1,600 more trading on Tuesday, and then 550 going up today. So it hasn't been quiet the rest of the week. But still a huge explosion in 6 put paper here in October. CARLEY, how does that factor into your strangle analysis? You were talking about August. What about some 6 puts going up 15,000 times in October this week? Get you excited, CARLEY?
Yeah, we're seeing a lot of very interesting things in natural gas. I think you mentioned there's obviously a lot of option volatility going through the natural gas market. And I think that's probably what contributed to the big rally we saw on Monday and then the blow off, sell off. the following couple of days. Because if you think, it's a lot like if you remember GameStop a couple years ago, I guess it was now, where there was a big gamma squeeze. Market makers that are selling call options to speculators have to hedge their risk, and they do it by buying futures. And I think it just started to become a big vacuum as everybody was gobbling up call options, almost regardless of price. Some of those options got really wildly expensive. I mean, nutty expensive, several $1,000s for options that are, prices we haven't seen in a decade or more. So it's been interesting. Other thing to keep in mind, just on a completely random note, is also a lot of, if you look at the COT report, which is the Commitment of Traders report by the CFTC, a lot of traders were short coming into this week and actually last week as well. And so those short traders probably got really squeezed out, which is generally indicative of, not saying we can't go and retest those highs, but you want to be really careful trying to buy into this market, because the volatility can go both ways.
Yes, we have seen nat gas hit some pretty impressive triple-digit vol levels. Not quite there right now, but still hovering around an 80. That's more volatile than Bitcoin. That's probably more volatile than Tesla. I'll have to pull it up right now. Moving a little bit today, but outside of that, Tesla hasn't been at an 80 vol in a while. So you're seeing some pretty aggressive vol levels out here, which, again, you can't argue that it isn't merited. If you're wondering about the 10 strike, that has been active, listeners. Looks like out here in August was where the 10s were the most active this week. 7,600 of those going up, including 5,000 on Monday. Seems like someone maybe giving up the ghost on the 10 strike on Monday. Looks like the lion's share of those were closing. 1,300 today and about 1,000 on Tuesday, 500 on Wednesday. So the 10 calls haven't gone away. They've just been usurped by some other strikes out here, including, I like those 6 puts. I want to take a look at what went up with those in October a little more. October is a long way to go if you're writing those puts. So I don't know if I want to go out that far in this, but still, it's intriguing. I want to go check out exactly what they were up to out there on these, maybe a little bit after the show. Let's look really quickly. Any other interesting? Oh, the one calls. if you were so intrigued, listeners, the one calls trading 3,700 times in December. All of that on Tuesday. All of that opening. Interesting. So getting some one call action there in December. Gotta love when they go for the meaty strikes out here. Yeah, nat gas, I think the technical term is all over the place with the paper this week, which is kind of interesting. We saw for a while there, getting back to Carley's point earlier, maybe we did see a bit of a blow off, because for a while there it was all 7 calls and all 10 calls. Now this week we're seeing a much more diverse array of options and strikes lighting it up this week, which is kind of interesting, maybe indicative that we did see a bit of that blow off or a bit of that gamma squeeze that Carley was talking about. What are your thoughts on nat gas, listeners? Do you think we did see the top out here? You think we did see maybe a little bit of a gamma-driven rally, and now we're kind of coming off the other side? Hit us up. Let us know. Meanwhile, since we're hanging out in energy right now, let's switch that drop down, listeners. Go up 2 slots, because WTI also in our movers and shakers this week. Haven't hung out in crude oil in a little bit, even though it is on the minds of many people right now. Whenever they go and fill up their car these days, they always tend to curse all things crude oil. And coming into showtime, we are seeing WTI retreating a little bit this week, off 2.5 handles, or about 2.3%. Still north of the par strike, right around 103.89 in those front futures. A little bit lighter paper this week, which is kind of interesting. Usually WTI is good for 400,000 contracts. Right now, 312, so a little bit lighter out there this week. The lion's share of that action, 52% of it coming in the June contract that goes away in 26 days. Carley, I know you play a lot of nat gas. Have you been keeping an eye on WTI of late, and what's been catching your eye out there in crude oil?
Yeah, absolutely. Crude oil is moving. We have a lot of clients that are trying to play it. It's been pretty treacherous. Let's just put it that way. I mean, just a few minutes before I came on the show, oil rallied $2 in about 5 minutes for no reason. So it's just one of those markets that I think what you mentioned, something interesting that you said was the option volume seems to have pulled out a little bit, or maybe you were referring to futures volume, but we've seen both volume across the board, futures and options and oil, kind of just pull back because of the wild swings and the erratic trade. A lot of speculators are starting to move to the sidelines, which is interesting. We've seen this a couple of times in crude last. Let's see, it was like over Thanksgiving. So like in 2021 towards late sorry, late November, early December, we saw the same thing. And then especially in 2020 of April, March area, we had like a really big blow up in volatility. And then speculators stepped to the sidelines, volumes dropped. And then honestly, the market kind of became a little more civilized from there for the next couple of months. And so I'm hoping that's what we're seeing. I'm hoping that's what it takes, is to get all the frothy money being thrown around and to get back to fundamentals, which in this environment, it's hard to even say what the fundamentals are because it's all a guessing game. But with that said, I'm hoping that we're working toward reduced volatility because it's just been really tough to handle on both sides of the market. If you look at the option vol, it looks relatively tame, but if anybody that's trading intraday can tell you it's not nearly as tame as the option vol makes you believe.
Yeah, it's a good point. Who knows what the fundamentals are in some of these products right now, right? Everything's so fluid over there in Ukraine right now, where they're testing another missile that they say is nuclear capable as we speak. So all sorts of madness unfolding over there. But let's see what kind of madness unfolded in the crude oil market. Yeah, as you mentioned, like the volume is a little bit lighter this week, which is always kind of interesting out here. And a half of that, 52%, going up in this June contract. So that's an interesting concentration of liquidity. We don't always see that in WTI. Usually it's a little bit more spread out. We see those concentrations in the ags a lot, but not so much in energy. So let's go out to June. Like I said, it has 26 days to go. That future at about 103.89 right now. In terms of vol out here in WTI, we're looking at about a 49. That's off about 3.3 points. So still pretty frothy. Again, but it's not obviously not nat gas. You're talking roughly half, a little more than half of what we're seeing out there in nat gas. But it still is pretty frothy when it comes to WTI, as CARLEY was just alluding to. In terms of the skew, pretty sizable evolution in the skew, at least on the put wing. Last week, no one wanted the puts. They were pretty much even with the at the money, about 1.2% cheaper. This week, coming in quite a bit. They're 7% cheap this week. So folks coming for the puts, the calls, 3.7% bid last week. This week, almost 10% rich, 9.6% rich. So puts coming in, calls getting bid. That is kind of interesting. That is kind of what you would traditionally maybe expect, as you're just moving down the skew curve a little bit like we did. But still, that's a pretty aggressive movement. Let's see if we can dig up what's underlying that. First off, the big trade of the week out here, listeners, in WTI options, nearly 10,000 contracts of those 90 puts going up this week. So that would certainly count as in the put wing there, given where we are at 103. So maybe that pay. Actually, they were pretty active all week long. The big day is actually today, 3,500 today, 2,800 on Wednesday, 1,700 on Tuesday, 1,600 on Monday. It's like back and forth on these 90 puts pretty much all week. So it's hard to tell where the bias was. Obviously, the vol came in pretty aggressively. So you probably want to guess someone's probably lighting up a few of these out here. But still, intriguing stuff as we see a lot of action of these throughout the week. Then right behind it, we see, looks like it's a bit of a tie almost between the 80 puts, so a little bit farther out the money puts, doing about 7,500 contracts, and the 115 calls doing 7,100 contracts. Let's go to the puts first. They are winning ever so slightly, about almost 5,000 of those going up today, 4,700. So maybe this is that pop you're talking about there, CARLEY, today. We're seeing a lot of paper in WTI options today. The rest of the week kind of sleepy. Only 1,300 on Monday, 800 and 500 respectively, Tuesday and Wednesday on these 80 puts. Off to the calls, same deal. Today, the most active day, 3,000 of these 7,100 having gone up today, 2,700 yesterday. Looks like most of those were opening, 1,000 on Tuesday and about 500 on Monday. So yeah, a sleepy rest of the week in WTI, CARLEY. And it seems like this move today is waking everybody up. All of a sudden, everybody's coming for WTI options today because, yeah, today's the most active day by far, CARLEY.
It feels that way. I think what a lot of it is, I think people are trying to play is there's some rumors going around that there's a good chance the EU is going to decide whether or not they want to embargo Russian oil over the weekend. And so I think that's what people are trying to speculate on. I can say that usually when you see a whole lot of option buying on both sides of the market like that, and we're flatlined as we are, I mean, oil's been intraday volatility has been pretty high, but if you look at it, we're really just kind of hovering in the $100 area. It hasn't really made a whole lot of progress that's stuck either way. So I think the pain trade is actually for vol to quiet down and for things to calm down. And I think that's probably what we're going to get, given the fact that there's so many people trying to speculate with options on both sides. But time will tell. I've given up on trying to guess what any type of political entity is going to do. So we'll just have to watch price and see how it goes.
I think I have found my favorite trade of the week here, though, CARLEY. I was looking while you were talking, and it looks like in November, someone traded about 1,000 of the 200 calls.
We've been getting a lot of people interested in that sort of thing, $200, $300 calls. So I do recall, I've been doing this for a long time. That doesn't mean I can see the future, but I do remember this type of stuff going on precisely in like 2007, right as oil was getting up to about $150, and the next stopping point was $30. So just keep that in mind.
Yeah, whoever is lighting up these 200s here. That was all opening, by the way, almost 1,000 going up on Tuesday. I don't see any other strikes. Usually this kind of weird paper, maybe it's a fly or a vertical something. I don't see any of that. It's all, the only thing that traded on Tuesday were these 200 calls all opening. So someone taking an opening stake here on the 200 strike, probably buying given what we've seen if past is prologue. I mean, they could have been overriding these. I don't know how much they're getting for the 200 calls, but intriguing stuff nonetheless here. You like these 200s, listeners? Yeah, I'm with CARLEY. Maybe that's the sign that we are heading back to a more reasonable price out here. Speaking of reasonable, I don't know if the ags, if you can call them reasonable, but they are moving a bit this week. So let's head out to the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the ags. Go into that asset class drop down. It's pretty easy. It's alpha order, so ags at the top of the list there, listeners. Then we're going to go over to grains and oilseeds. Going to make our first stop here in soybeans. They are number 5 on the light side this week, up 3.86%. And CARLEY, sounds like you have good timing joining us this week because a little birdie told me you've been playing around in soybeans of late this week. What's been catching your eye out there?
Well, the grain market has been relentlessly bullish, so I wouldn't get crazy with it. But what we're looking to do is play the downside in November soybeans. Of all the grains, the soybeans probably have the least compelling fundamentals on the bull side. So we're putting together some option spreads that are bearish. Basically, purchase a bear put spread and then use a short call option to pay for it. You should be able to get the short call well above the market. We're talking like $2.50, $3 above the November futures price. And you can buy like $1 put spread and come out with a trade that gives you plenty of room for error, some profit potential if we're right and prices roll over, and isn't going to cost too much out of pocket. And you're also taking advantage of the fact that fall is a little bit expensive, not crazy, but it's expensive enough that you can get a nice good spread and not have to worry about it unless something really wild happens and beans rally $2 or $3 against you. So it's a comfortable trade. It's not super aggressive, but just some looking to get a foot in the door before things potentially roll over. It feels like to me, I mentioned this in nat gas, and timing these things is almost impossible, but it really just feels like the whole inflation narrative and the commodity boom is really running out of steam again. I keep thinking back to 2008 when we thought grains would only go higher, oil would only go higher, and literally a few months later, we were talking about deflation and everything was crashing. So things can change very quickly. I'm not saying that's going to happen. I'm just saying we need to keep in mind that commodity rallies are very rarely long term. They're usually temporary and they usually roll over sooner than most people expect them to.
Yeah, we just had that conversation on our last show, the option block. We were talking about usually through the lens of commodity-oriented stocks, but how a lot of them have come on hard times in the last couple of weeks. So it does seem like a lot of people out there, CARLEY, are thinking that perhaps this near-term commodity boom, driven a lot of it by what's going on in Ukraine, perhaps has peaked, at least for the time being, CARLEY.
I think so. I mean, the Ukraine thing throws a complete wrench into everything. Obviously, if Russia hadn't have invaded Ukraine, I think we'd be looking at a lot different world. I think everyone knows that. But so it's tough to see what's going to happen here. But I can say this: grains are renewable. They're grown every year. And so even if we have a rough couple of years, markets are forward looking and eventually they'll start to price that in. So if we're starting to look at, like, for example, like I mentioned, we're doing November soybeans, that's not really directly related to the war, but soybeans have benefited from the fact that corn and wheat have moved higher. And so that's, if you're looking at new crop trades, I think that's probably the place to be. If you're trying to be bearish, front month, who knows what the heck's going to happen in the next couple of months. But if we're talking in the next year or so, I think there's a pretty good shot that grain prices will probably be a little lower next year than they are this year. But again, you want to be safe out there. There's no sure things.
Good words of warning for these markets in particular out there. Coming into showtime, we are seeing pretty lofty levels for these beans, almost 1750 up there. That just looks so pricey for soybeans out here. And of course, soybeans also kind of doing their best equity impersonation. 310,000 contracts on the tape this week. 38% of that going up in that May contract that goes away in less than a day. So a lot of very near dated paper, kind of getting back to what we were just saying. Maybe some folks specking that this near term upside has spent itself. We shall see. We're going to go a little bit farther out, though, listeners. We're going to go to the July contract that has about 22% of that 310,000 contracts. So still a pretty active contract, but it also has 64 days yet to go. So a little bit more meat on the bone than a one-day contract to analyze. In terms of vol, we're looking at about almost a 23, about a 22.85. It's up about half a point. If you're looking at that front contract that's going away tomorrow, that's at a 30. So again, take vol with that near-dated contract, a bit of a grain of salt. In terms of skew, the puts this week, 5.5% cheap. Last week, this week, they're 8% cheap, so coming in there. The calls last week, 8.2% bid, and this week, almost 10% bid. So calls getting a little bit juicier. If you look at that near-dated contract really quickly, the puts last week, almost 11% cheap. This week, 4% cheap. So, well, actually, 11% bid last week. This week, 4% cheap. So the puts have come in dramatically in that near-term contract. The calls, 12.5% cheap. This week, 2.8% bid. So the calls swinging up, the puts swinging down in that contract that's going out tomorrow. In terms of the action this week, what was the most active contract? I said we're hanging out at about a 1750. So does it surprise you that nearly 10,000 of the 17 half calls were leading the dance this week? That was pretty much it. It was active just about every day this week, 2,500, 2,500, 2,600, and all of that closing. So folks were bailing on the 17 half calls pretty much all week this week, which is again, maybe not surprising given the fact that we're hanging out right at that strike here on the show. Then we have a bit of a tie for number two. The 1700s did about 6,600 contracts. The big day for those was Monday, nearly 3,000 contracts. The rest of the week lighter, 1,100 to 1,300 every other day, all closing pretty much throughout the week. And then right behind that, we also have the 2,000 calls. These are in July. Those also did about 6,400 contracts or so. So right behind it. The big day for those is today, 3,400. So over half of the paper going up today, 1,700 yesterday. And then the rest of the week kind of light. So a near-dated surge here in the 2,000 calls in soybeans. That's kind of interesting. I'm looking for some other paper today that may explain. It looks like the 1900s also trading 2,700 today. So maybe a bit of a funky 1,900, 2,000. That's a bit of a ratio, though. So, yeah, this is a strange one. Also have 17 halves and 2,100s trading 1,300 times each today. So, yeah, those strikes don't really line up fantastically. It could be 17 half, 2,000, 2,100, one by 2 plus, and then one again. There's all kinds of calls lighting it up out here today, listeners, in the July cycle. So upside calls, looks like there's still a little action here, and most of it's opening. So some interesting strikes out there. Any of that come as a surprise? Oh, before I do that, Carly, really quickly, it's like I missed one. We have to go a little bit farther out. We have to go all the way out to November, the 1600s. Very active there as well. In fact, they would actually be our number two this week. 74, almost 7,500 of these. The big day was Wednesday. 4,000 of those going up on Wednesday, 2,100 on Monday. Looks like someone was bailing on these, though, because these were pretty much closing all week long. So interesting stuff. Any of that come as a surprise to you, Carly, given how active you've been in soybeans of late?
Sure. So not necessarily surprising. I mean, I think a couple of things are going on. First of all, soybeans obviously are in an uptrend, and we've seen some really wild commodity moves in 2022. So I think maybe you could make the argument that beans have been a little better behaved than some of the other markets, particularly wheat and even corn. So the call options still aren't overly expensive like they are in some of the other markets. So for somebody that's looking to just speculate, especially we're going into first notice day next week for the May contract, sometimes that triggers some volatility. And it usually triggers volatility in the direction of the trend. So my guess is some people are trying to play that, just hoping we get some weird erratic spike going into contract first notice day, I should say, next week on the May. That'll obviously impact the July as well. So Probably not a bad idea, honestly, to have some cheap flyers out there just in case soybeans becomes the new wheat, or you just never know. In 2022, the surprises keep coming, so they're cheap, might as well.
Yeah, let's see. And since we're hanging out in the ags, really quickly, I promised you earlier on our last show we would keep the bacon love alive. So let's take a quick swing into our old friend, the lean hogs. They are number 2 to the light side this week, listeners, up 11.3%. And lean hogs actually have turned into a little bit more of an option story than they used to be. Nearly 30,000 contracts on the tape. Again, it's not to the E-mini or Eurodollars, but it's not the couple of thousand that it used to do out there as well. So lean hogs looking pretty active this week. If you're wondering where are lean hogs trading right now, that front future 110.5 off about 2.75% this week. If you go out to a little bit farther to the June contract, which is where we're going to be looking, that future's at a 116.8. That one's off about 1.4% this week. So since our show last week, lean hogs have been on the rampage. And again, almost 30,000 contracts, pretty much exactly half, 50.5% of that going up in the June contract. What is the vol out here, you might be wondering? In lean hogs, it's a 27.25. It's off about nearly 2 points this week. In terms of skew, the puts last week, 6.3% bid. This week, 5.7% bid. So still a little put love out there, just not as aggressive as last week. Last week, the calls, nobody wanted them. They were 2.9% cheap. This week, 3.8. So calls getting a little cheaper. Puts getting a little bit less expensive as well. And in terms of that nearly 30,000 contracts, what was the big dog? I said we were at about a 116.8 on this future, listeners. The 112 puts were leading the dance with 1,311. That's a lot for lean hogs. A whopping 1,311. The big day was Tuesday, nearly 1,000 going up on Tuesday. Most of that opening. Looks like maybe we have actually it doesn't line up for verticals. The 120s were also active this week, but those were just pretty much active every day. 300 a day, pretty much. So talking 1,100 on the week out here. So yeah, a lot of action in puts here in June. Let's look really quickly, see if we see anything else out here in this crazy product that is no bacon love out here, unless we go to the 130s. Those are pretty active, almost 1,000 this week, 818 to be precise. The big day for those today, about 350 today. So pretty active. Carley, do any of your clients ever try to lure you to the dark side of lean hogs, madam?
Yeah, you know what? Actually, we keep an eye on the hog market, and we make some recommendations there as well. We've actually been kind of encouraging our clients to buy out of the money calls and hogs. We started a week or two ago. The nice thing about the hog market is, you're right, liquidity is not quite what it is in some of the other markets, but that's kind of a nice thing because you know what? The algos haven't taken over. It's not a slave to Ukraine, Russian headlines. It's kind of doing its own thing. It's behaving itself. And so in my book, that's not a bad place to be. The options are still pretty cheap. So if you're looking for limited risk speculations, it's a good place to be. We personally are looking for hogs. It's kind of been trading in a trading range for the last 2.5-3 months, and we're looking for it to head back up to the upper end of the range. That idea looked pretty good a few days ago. Today, we've pulled back a little, not so great, but I still think that's the right move. So, yeah, I think it's worth taking a look at, even if you're not necessarily familiar with the hog market. It's the chart is the chart. You can look at seasonals and fundamentals aren't that hard to get a grasp of because, it's not as complicated. Let's just say it's not as complicated as something like crude oil when we're talking about war or wheat or things like that. So I think it's a nice, calm, lower risk place to be. I like it.
No, that's a good point. The algos haven't seemed to crack lean hogs quite yet. Yeah. So if you're concerned about getting run over in the algos like you do in some of the big equities and other things, you're maybe a little safer. Doesn't mean that lean hogs are safe. They still can move all over, but sure. At least it's not an algo running you over.
Yeah, exactly. And it doesn't mean you can't be wrong and lose money. But all I'm saying is there's good and bad about the electronic markets and moving from open outcry to, we can have a big conversation about that. But the reality is the algos do push the markets further and faster than they probably should go. And you don't get that in lean hogs. It's a little more pure price discovery.
All right, Carley. Well, I twisted your arm, made you talk about the hogs. Sounds like you weren't that reluctant, though. So I'll let you choose where we go next. What product complex lighting up your tape?
Actually, while we're talking about hogs, we can also talk about cattle. The same benefits of the hog market apply to cattle. They're a little thinner, but they're a little truer to price, and they're a little more behaved at this particular time. That's not to say that cattle can't go crazy. I've been involved in cattle markets when they go limit up for 4 or 5 days in a row, so it can get wild. But for the time being, it's relatively tame in regards to volatility. And so we have the same idea there. We've been advising clients to buy out of the money August calls. And so far, so good. We'll see what happens. I mean, who knows? Who knows? Again, don't have a crystal ball, but I think that's, again, a calmer market to take a look at. We're also, I don't know if you've ever mentioned Eurodollar options on this show or not.
We talk about Eurodollars quite a bit, so we could certainly get there. You threw me a curveball though with live cattle. That's actually that is a newcomer. We have never discussed live cattle here on the show, so I just pulled it up. Pretty decent week, 43,000 contracts. So it's actually beating a lean hogs this week, listeners. If you're wondering, if you're saying where are live cattle trading right now, 139 and about 3/4, listeners, up about 3.3 handles, or almost 2.5% on the week. And again, 43,000 contracts, so nothing to sneeze at out here. And it's the June contract, again, that has about 43 days to go, that is leading the dance with 39% of the paper. What is the volume, you might be asking, in live cattle? It's about a 12.97 to be precise, up a whopping 20 cents. So not the most volatile product, but it's also not, the 30-year either. Got a little bit more juice there, a little bit more juice for the squeeze. In terms of, let's see, skew last week, the puts, 8.5% bid for the June puts in live cattle. This week, 8.1%. And then the calls, 4.3% cheap. This week, 3.3% cheap. And let's see really quickly, the most active trade, like I said, we were at about a 139 3/4. The 135 puts doing almost 3,000 contracts this week. So that's a pretty big clip here for live cattle, their first appearance ever on TWIFO, which is kind of fascinating. But now she has requested the rates. So off to the rates we go.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, welcome to the world of rates. Before we get there, Carly, looks like our live audience, they've been excited by all the lean hog talk. Maybe it's just all the bacon talk from earlier. They all say they want to start investigating lean hogs. So perhaps we've created a little groundswell of new lean hogs options traders. Carly, what do you think?
Yay, all right. I'm all for it.
See, you start with bacon and people are more willing to listen to what you're going to say next. You lead the conversation with bacon. People get excited out there. But yeah, Eurodollar, maybe Eurodollars bulls, maybe not as excited this week. An intriguing week out there for all things Eurodollars. Coming into showtime now, they are kind of looking a little bit quieter. That's why I said take some of those crazy aggressive prints we see out there with a grain of salt. It is kind of hard with so many cycles and moving parts in the Eurodollars to come up with an aggregate number, how much this thing is off. But still an interesting week out there. Carly, what's been lighting up your tape in the Eurodollars this week?
Yeah, so, I mean, obviously we've had a massive repricing in the interest rate markets. And a cheap and easy way to play that is the Eurodollar options. So what we are looking at, what we've been looking at today is the idea of just, these are complete flyers, not necessarily high probability trades, but it's just the kind of idea that, hey, guess what? Maybe the market's wrong in pricing in all of these Fed rate hikes and all of this inflation, because all of this is being done on expectations, not reality. Maybe it'll be reality a year from now, maybe not. I happen to think it probably won't be, but only time will tell. So with that in mind, like if you look at the March of 2023 Eurodollar future, it's pricing in a short-term interest rate of about 3.5%, which is a whole percentage point higher than it was just in early March. So these are some pretty massive moves. It's possible to purchase deep out of the money calls. And when I say deep out of the money calls, I'm talking about prices that were just being printed a month and a half ago. So it's not that impossible that we get back there. Maybe it happens, maybe it won't. But for $300 to $500, you can get, 326 days in the market and see what happens. Sometimes what we think is absolute truth today turns out to be completely different than what reality is a year from now. So it's a shot in the dark, but I think it's worth a play.
Well, let's see what folks are playing at right now in Eurodollars. By the way, listeners, 1.63 million contracts on the tape in Eurodollars. Not the most active week they've ever had, but also Nothing to sneeze at out there. A lot of paper going up in the Eurodollars yet again. Of that, about 16.5% going up in that near-term SEP contract that has 150 days to go in that front portion of the Eurodollar curve. Remember, they go all the way out, listeners. So you got a lot of expirations to play with, which I know for a lot of you is intimidating when you first start looking at the Eurodollars. Where's that future hanging out right now? 97.4 or so, off about a little over a quarter of a point or about a quarter of a percent on the week here. And in terms of the vol, again, Eurodollar is one of the few products in the rates complex where you can look and say, you know, this thing has some juice. This thing has some vol. Mostly the rates complex is where vol goes to die, but not in the Eurodollars. It's talking at a 115 right now. That's up 14.5. That's more volatile than a nat gas and a Bitcoin, than a lot of other products you're going to look at out there right now that are pretty much synonymous for most people with volatility these days. People don't often use and mention Eurodollars in that same sentence, but they probably should start doing that. In terms of action out here in the skew, not much change there. The puts last week, 1.3% bid. This week, they're about a point, so it has come in a little bit. The calls last week, 1% bid. This week, nearly 3%, so a little bit of a bid there to the call side. And in terms of action, what was the biggest trade, the hottest contract out here this week in the Eurodollars? You know, you always have to scroll all the way down, listeners, unless you missed something. Yes, and this is the May contract that's going away in 22 days down here. This at 96 half puts have done nearly 40,000 contracts this week, 39,250 to be precise. So again, that's more than we were just talking about. Lean hogs, that's more than the entire lean hogs product and almost as many as live cattle. And that's just one put here in the Eurodollars. And of that, looks like it was pretty active all week. Eurodollars is a weird beast, though. It could do 17,500 contracts yesterday, 8,000 on Tuesday, 13,000 on Monday, and then 0 today. Not even one contract today. So it has these weird fits and starts. Yet still, that's enough for the number one most active contract out here this week, the 96 half puts in May here. Again, almost 40,000 contracts. Then we go back up to where we were hanging our hat earlier here. This is the SEP contract at the 97 puts right behind them with about 36,000 of these as well. With a big day again today, 28,600. So those other puts we were just talking about, they did 0 contracts today. These SEP puts doing 28,600 today. That was actually the biggest day of the week. The rest of the week kind of light. 5,000 on Tuesday, 1,000 on Monday, 1,500 on Wednesday. So all the paper here today looks like maybe a bit of a 97 half, 97 put spread because 22,000 of the 97 half puts also going up today. So maybe a bit of a funky put spread there. But yeah, a lot of put action leading the dance out here in Eurodollars, which kind of hard to say it's that surprising given what we're seeing out there. It's kind of what you'd expect. I'm just looking to see if I can scroll for any other weird, aberrant prints out here. You know, the 98 calls are also pretty active in June, going a little bit farther out. Those have 31,000 contracts on the tape as well. So again, Eurodollars paper tends to scatter a little bit, and it makes it interesting. Again, also makes it a little bit intimidating for newcomers out here, but intriguing stuff nonetheless. Actually, you know what? I buried the lead. I forgot about one. The June 98 and 5/16. Haven't said that in a while. Puts. They did nearly 50,000 contracts, 49,800 to be precise. So those would actually take our winner chicken dinner for this week. Again, you got to scroll for a while to make sure you see everything here in Eurodollars. Those are pretty active all week long, with the big day was Tuesday. 30,000 going up on Tuesday, 10,000 on Monday, 8,200 today, 1,500 yesterday. So a lot of action on those 98 and 5/16 puts out there. Speaking of action, we got to get out to a little bit of the equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, to the equities we go. You know, we can't talk equities without talking volatility, so let's set the table out there. Coming into showtime, we were talking on the option block earlier today. It does seem like the worm turning a little bit out there. The markets were kind of mixed to a little bit green earlier in the session. Now they're looking decidedly red, and vol ticking up as a result. Up slightly, but it was going to be down earlier today, so there we go. RVX, which is the VIX of the Russell 2000, at about a 28.5 when we kicked off the show. That puts it up slightly, about a third of a point from where it was this time last week. But again, threatening that 30 handle again. So small caps looking a little frothier again. VIX at about 21 3/4 when we kicked off the show. That puts it up about 1/4 of a point. VVIX, the vol at about 109 1/3. That's actually down slightly from this time last week. Vol Q, which is the at-the-money vol of the NASDAQ, at about a 28.16. That's down nearly 2 points, about 1.8 points from where it was this time last week. That puts that VIX to RVX, so that large cap to small cap vol spread, at nearly 7 points, about 6.7 points. That's about 1.4 points wider than it was this time last week. And the VIX to vol Q spread at about 6.4. So pretty similar, actually, NASDAQ to S&P vol spread versus the Russell 2000 to VIX vol spread. That's interesting. Usually you don't see those two hanging out at the same level. That's because the VIX to vol Q spread got a lot wider this week, almost 3 points, 2.85 points wider than this time last week. So, Carly, I know you're not lighting up the cattle and the beans and everything else over there. You're also trading a little bit of equities. What's been lighting up your tape out there this week?
Yeah, the equity market, I almost always have an opinion in, but I literally have no opinion. There's a lot of mixed signals out there. Chart-wise, the two numbers we're looking at are 44.80 and 43.20, and whichever we get the next close above or below is probably the direction we're going. Other than that, I really have no idea. I probably wouldn't touch it with a 10-foot pole, to be honest, because we're getting if you look at sentiment readings, everybody's bearish. The whole world is bearish. Nobody thinks the stock market can go up, which is usually a bullish sign, and seasonally things are bullish, but the chart just looks awful to me. So that's a tough read. I wouldn't wish participating in that market on my worst enemy, at least until things get a little more clear.
It is funny. You'll dive into nat gas and live cattle before equities.
Yeah, I kind of go figure.
It shows where your risk tolerances lie in different products. That's interesting. I like that.
Yeah.
Let's break down a little equity action. Let's go out to the FTSE Russell hot seat here, break down the action in the Russell 2000. A little bit lighter week, only about 20,000 odd contracts on the tape in Russell 2000. So again, quieter. We have seen some earlier in the week, some muted moves in the Russell 2000. Seems like it's picking up a little bit out there today. You guys always want to know about all things small delta calls. Actually, it's a little bit farther out. It's the week 3 May contract with nearly 30 days to go that is leading the dance this week with about 27% of the paper. And what is the vol out here? About 26.8. It's up about 1.6 points out here. And then let's see, skew-wise, the puts, as you know, they're bid, a little bit more bid this week. They're 13.9% bid. Last week, 15.2% rich. This week, and last week, the calls, 12.4% cheap. This week, a little cheaper, 13.3% cheap. And in terms of where the action is, by the way, coming into showtime, we're below 2,000 again, 1986.5. It's the 2270 calls that are leading the dance. So you folks do like your out of the money calls here in the Russell 2000. And they all traded in one day, nearly 500 of them going up on Tuesday, all opening. So interesting. So the 2270s in the week 3 May contract. That's interesting. Looking at a little bit of resurgence perhaps here in the Russell 2000. Maybe a bit of an overwrite. Look and see if anything else went up against it. Doesn't appear to be the case. It's just straight up upside call interest here. But that's not enough for you. Also, we have the 2200s in the end of the month, May. So those have 40 days to go. Those also traded around the same number. Actually, looks like it was a 2200 vertical. Went up about 400 times. What a weird, nonsensically tight vertical to put up. But someone did it nearly 400 times yesterday as well. So yeah, some oddball paper lighting it up out here in small caps, listeners. Let's look closer to home. The 20 halves going out tomorrow, also pretty active. That's kind of just a day that ends in Y. There's going to be some crappy small delta calls that are still trading in the Russell 2000, and that is the case again this week. So this week it's all little calls all the time here in all things Russell 2000. That's kind of interesting. I thought we might see a few puts lighting it up out here, but that does not appear to be the case. Carly, we got a few minutes left. Let's see if we can welcome on some of the listeners, a little bit of their futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to the Futures Options Feedback. You know we always like you folks in the live as well. You get bumped to the top of the list. A lot of them we're still chatting, Carly, about looking into lean hogs. Nichols wants to look into lean hogs. Unlimited says 2 years ago when COVID first started, he bought a pig from a farm that was already butchered, but that's as close as he's going to get to buying lean hogs. So I get it. Lean hogs is not for everybody there, but it is more active. Almost 30,000 contracts. It's not a product you can dismiss as easily as back when it was, a couple of thousand contracts and that was it. So lean hogs, move it. And if you're, like Carly mentioned, if you want a product that is at least right now still mostly isolated from the algos, they can't make heads or tails of that, then there you go. Maybe lean hogs is the one for you. But Carly, one of the last times you were on, we were talking, we had that great listener question. I think it was when you were our pro Q&A hot seat about wheat and Ukraine and all the kind of impacts there. We asked our audience back when this invasion first happened, we said, how long do you think the impact of this Ukraine fiasco is going to impact the markets? And our audience overwhelmingly chose, like over 70% chose within a few weeks to a few days. So I was a little surprised by that. I was much more cynical. I thought it was going to be longer term. Obviously, we've all seen now it's dragged on for 2 months. Seems like it's going to be dragging on longer. So we gave our audience a second tilt at the windmill. We said, okay, we're going to ask you that question again. You guys kind of whiffed it the first time. But how long is this war in Ukraine going to impact the markets? Gave you 4 choices: between 1 to 3 months, between 3 to 6 months, between 6 months and a year, and over a year. So Carly, I'm curious for you, what is your spidey sense telling you about how long this thing is going to drag on, at least from a market impact? And then B, what do you think our audience is voting for?
I'm going to say over a year, and I assume the audience is going to say the same.
Interesting. So you're on the more pessimistic side, shall we say, which I can't disagree with. I was kind of leaning that way in the initial poll as well. And you're with our audience, Carly, 43.5% saying over a year still. Okay. So on the one hand, I wish they're all wrong. But on the other hand, I can't really cynically, I can't say I disagree with that. And the number 2 is between 3 and 6 months, 26.1%. Between 6 months and a year, 17.4%, and 13% bringing up the rear between 1 and 3 months. So unlike our last poll, over 70% of you said it was going to be done within a few weeks. This time, over half of you are at least 6 months, if not a year. So that's quite the sentiment shift we have out there. Speaking of sentiment, we asked you guys last week, Carly, I'm curious if you're surprised. I was kind of surprised by this. We asked you, a lot of new products are hitting the tape right now. A whole bunch of them. Which ones are exciting you right now? Oh, some we announced on this show, the CME Micro, Bitcoin, and ETH options. We had Tim McCourt from CME on here kind of touting those when they first launched. We have the SVIX, which is the inverse VIX. And we have the UVIX, which is the double long VIX. Both of those just launching last couple of weeks. And we also had the nanos from SIBO on SPX, which are the no multiplier options on SPX, listeners. And for a long time, it was the micro, Bitcoin, and ETH that were dominating the tape. And then in the last hours of the poll, the nanos from SIBO had a huge upswing. So I'm guessing maybe someone from SIBO saw this poll was floating around and they got some folks to vote. Either way, 31.5% of you chose the nanos on SPX. If that translated into trading volume, they'd be pretty happy. That hasn't really happened yet. Number 2, right behind it, were the micro, Bitcoin, and ETH options. I know a lot of our audience on this show are intrigued by. And then 23% almost for the UVIX, which is the double long VIX. And only 20% of you, I was surprised, it came in 4th for the inverse VIX. I'm curious for you, Carly, have the micro, Bitcoin, and ETH, has that resonated with any of your clients over there? Are they intrigued by these?
The unfortunate thing about the Bitcoin and ETH options and futures, both, is everybody wants to talk about them, but very few people will trade them. A lot of people will request access, but then they just, for whatever reason, they're just not that active in those markets. And I can't really explain why, because it's literally all everybody wants to talk about. but they just haven't caught on the future side of things, and at least not among our clients. And looking at open interest and volume throughout the products, it's something that's getting more and more liquid as time goes on, but so far not as we haven't seen the big rush of traders that we were hoping we'd see. A product that you didn't mention, but I'm going to throw out there just for giggles is the CME has listed micro treasury futures. They're quoted in interest rates as opposed to futures price that has to be translated into interest rates. So those are something that our clients actually are finding quite useful.
You're right. We didn't put those in our polls. Only 4 slots in the Twitter poll at the end of the day. But you're right. That might be one. It seems like everything else micro at CME, the micro equity futures have been blowing the doors off. So It stands to reason, given how much action there is in the rates. Maybe we need to do another poll. Maybe we need to include the micro treasuries. There you go. So you're giving us fodder for new polls, Carly. We like I know more than a few of our listeners would probably vote that way. Unfortunately, listeners, that music means we've come to the end. We've already gone long here. So we have so much fun talking all things futures options. We tend to run on here, listeners. But don't worry, that's going to conclude our broadcast day here. But don't worry, we're back again tomorrow with Vol Views, noon Central, 1 p.m. Eastern. Then for all of you Secret Club cool kids, we're back. Options Oddities exclusively for you folks there. We had a break last week. Andrew was traveling, I was traveling. Now we're back in action. See what's lighting it up, what's dragging us down, all sorts of fun, unusual activities. So stay tuned for that. But before we go, Carly, if folks want to reach out to you, see what's going on, pick your brain about all these different markets, where should they go? What should they do?
Visit DECARLEYtrading.com. It's DECARLEY trading.com. There's our contact information as well as a bunch of information on our services and educational materials. Even if you don't want to trade, you just want to learn, it's a good resource.
There you go. DECARLEYtrading.com is the place to go. Pick up 1 or 2 of her books while you're at it over there. If you're intrigued by these markets, some good starter material for you to help you get along the way. And of course, you know where to go to see all these reports we've been talking about all show long. CMEgroup.com/TWIFO. TWIFO is the place to go. And remember, if you want to upgrade to the full version of it, check out what Nick and his team have to offer. You can get a free trial, kick the tires and light the fires. Bantix.com, BANTIX.com. A lot of great data over there. If you're trading, if you're interested in these markets, you literally have nowhere else to go. That they are the keepers of this data. So it's their tagline. All the stuff you can't find in one place is pretty apt. Bantix.com is the place to go to learn more. And of course, you know where to go to learn more about all things small caps. FTSERussell.com, FTSE Russell.com is the place to go. COVID Impact Center. What's going on with small caps this week from a vol perspective? Recon coming up. I do want to pick their brains about that whole June 8th thing we've discovered on our network. Maybe Recon is one of these subtle players in that whole thing. So FTSERussell.com is the place to go. At FTSE Russell is the place to go. On Twitter as well. Give them a follow. A lot of great data coming out there in between episodes of this show. Again, back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. And then back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.